All right, you give me 10 minutes, I'm going to give you 10 trends. Here we go. Why should I give this presentation? Because I am the oldest, longest lasting internet analyst on the street in the galaxy. Why shouldn't I give this presentation? Some of you who saw me last year will remember that my stock picking sometimes sucks. I put a sell on Amazon in 2003, right before it began one of its meteoric stock rises, and I put a buy on Blue Apron at the time of its IPO, so caveat investor. 10 minutes, 10 trends. Here we go. First, market conditions are extremely robust. Show of hands, people here born before 1955. Show of hands. A few people. So I can categorically tell everybody else in the room that you just experienced the best June of your lives. In June, the S&P 500 rose 7%, the best performance since 1955. The first half of this year, stock market was up about 20%. It was the best first half in the last 22 years. Extremely good market conditions, and what happens when you have extremely good market conditions is you get these things, really good, interesting IPOs. Uber, Lyft, Pinterest, Zoom, CrowdStrike, Chewy. Yes, I know some of these companies generated a massive amount of losses, but they're chasing really big opportunities. These are companies that are usually very well seasoned. It's a good thing. Times are different. Back in 99 and 2000, there was this thing. Some of you will remember him or her or it. This was Pets.com. Just as a reminder why it's different today, Pets.com went public with $5 million in trailing 12-month revenues. $5 million. This is today. This is Chewy. Actually, this is Gracie, my golden doodle. This is a hand portrait sent to me by Chewy. As they do with all loyal customers. This company went public about a month ago with $3.5 billion in trailing 12-month revenues. $5 million, $3.5 billion. Times are different today. They're better. All right, market conditions are really robust. That's trend number two. That's trend number one. Trend number two, there's this perception that tech is in a major slowdown, and I disagree, but people looked at the first quarter of this year and they saw the slowdown by Google, Amazon, Netflix, Facebook, Booking, all of these companies, I think, along the way have presented here. And they saw growth rates go back to recede to 2014, 2015 levels. And the call was perhaps tech growth is declining structurally. And the answer is no, it isn't, because these companies have what are called GCIs, or growth curve initiatives. And they all have the opportunity to take that growth curve, that deceleration, and bend it, and maybe even bend it back up. So that's Netflix with price increases and an extremely strong content slate in the back half of this year. It's Facebook being able to monetize Instagram stories. It's Amazon rolling out Prime one day. So there are GCIs. Growth is not over. There is no tech slowdown. Trend three. This is a serious one. It's a real one. One of the speakers just talked about this. Rising regulatory risks. They're ramping really rapidly. You can say that 5 times quickly. The DOJ and the FTC divided and conquered, and they took the four leading tech platforms, Amazon, Apple, Facebook, and Google, and carving them up. I think what's not going to happen is a bust up of big tech. I don't think Google's going to be forced to divest YouTube, Facebook, Instagram, Amazon, AWS. I think that's extremely unlikely to happen based on the work we've done with academics and regulators to unwind acquisitions from multi-years ago. I think that's extremely unlikely. But what is a probability is that in the next year or two, these companies are going to face more fines, finally, from the US government, not just from the EU. And there'll be a cessation of some business practices. And maybe the biggest thing we'll see is the lack of large-scale acquisitions. So this is a real trend. Regulatory risks are ramping really rapidly. They're having an impact. Trend number 4, I also think, is a non-trend. So most people assume, they think that privacy risks are rising. The public is getting more and more concerned about violations of privacy. I'm not sure that that's true. We run survey work every 6 months. We ask 2,000 to 3,000 people, are concerns about data privacy materially impacting your usage of social media? We see a rising percentage of people who say no. Now, they're still a minority. It's 49%, so 51% say yes. But my guess is that as we keep going through this cycle, we'll see fewer and fewer people concerned about privacy. Of course, people are concerned about privacy, but there's a basic trade-off. You give me free services, entertainment, news, communications tools, you can have some of my data. So the idea that you would have a privacy book company coming out that could share with its users the revenue that they generate. You give them your data, they'll pay you for it. I think it's a pipe dream. So if you look at 3 large platforms that generated 200 to 300, that currently have about 200 to 300 million consumers, Pinterest, Snap, and Twitter, they generate about $5.05 in ad revenue per user per year. So imagine some privacy book coming out and saying, I'll cut you a check for 21 cents a month if you come over to my network. It's not going to happen. It's a pipe dream. Okay, trend number 5, advertising and commerce like chocolate and peanut butter, they're coming together. I'm not talking about Amazon, although I am talking about Amazon and AMS, Amazon Marketing Services, which is now the 3rd largest advertising platform in the world outside of China. I'm talking about what's happening with some of these other traditional advertising companies, Instagram, Snap, and particularly Pinterest. And they're taking that marketing funnel, brand awareness at the top, direct promotions at the bottom, transactions comes out of the funnel. They're collapsing it, they're smushing it, just like that Reese's peanut butter cup. And you're going to see the opportunity for companies, platforms, traditional social media advertising platforms like Instagram and Pinterest become really, truly large and disruptive e-commerce platforms. That's the 5th trend. 6th trend. This is coming at us live. I think it's November 12th that Disney Plus launches its streaming service, and Apple, whatever they're going to call it, Apple Plus is going to launch. HBO Max is going to launch in the next couple of months. I think Pringles Potato Chips is going to launch a streaming service. And why are they doing it? Because they see this thing called Netflix. It's got 150 million global paying subscribers, and they're going to have 300 to 500 million within 5 to 7 years. Why are they doing it? Because we're going through the accelerated decline of pay TV today. Last year, pay TV companies lost about 800,000 subs a quarter. This year, it's 1.2 million subs a quarter. Next year, it's going to be 1.5 to 2 million. It's an irrevocable trend. People want to go into streaming. There are ways to play this, by the way. You can invest in Netflix because they're the winner, and it's very hard to see them being overturned in the next 5 to 10 years. Huge scale advantages. Trend number 7, surrender now. AI is taking over. I'm going to give you just 2 examples to think about. This is a massive investment area, CapEx and OpEx. I think about what Google did 10 years ago, the amount of money that they put into predictive search. You start typing Aspen and it'll fill out a bunch of different options for you, multiple languages, by the way. That's a massive step up in computational firepower. They're doing the same thing now with predictive text. You start writing your Gmail and it'll give you alternative endings. You can do this with your books, book ideas, or research reports. It can be a real time saver. That's a real simple example of AI. Here's the father or mother of all AI examples. So Waymo just got cleared to certified to finally drive in California. Now they have to have another driver in the car with you, a human in the car. They can't charge you. This is a 3-year experiment. But you know what's going to come out at the other end of it. This is the biggest AI experiment that's out there, autonomous vehicles, and it's coming to a city, a town near you soon, if you can wait 3 years. All right, trend number 8. Let's get physical. I know we had Walmart here earlier today. I think the most interesting, you should have asked Doug this question. I think the most interesting innovation that's occurring in retail right now, it's what's happening in these Amazon Go stores. How many people here have shopped in an Amazon Go store? Okay, so that's about 39.7%. If we were to leave this conference, leave Aspen, go across the country, it'd be 1%, 2%, because there are only about a dozen of these damn stores. And if you're in New York, for some of you maybe New Yorkers, there's 2 in San Francisco for you folks, and there's 1 in New York. You have to go to the World Financial Center. You have to hunt for it to find it. What's that? 2 in New York? Great, so there's 2 in New York. Still, my statement holds, it's 1%. Who invited him? And anyway, the idea is that you scan, grab, and go. We're saving time. Think about all the time you've spent trying to check out. It's like all that time you spent in the damn TSA line, all that time you spend checking out of a store. You already know what you want. You know what the prices are. You're just going through the damn process of checking out. Amazon solved this, and you know it's coming to a Whole Foods, not next year, the year after that, but in the next 5 to 10 years. I better be quick. I'm running out of time. AR and VR. Yeah, I saw this. I saw what Fortune did. I sent them my presentation last week. Coincidence that it's on their cover? Adam, coincidence? Anyway, AR and VR, augmented reality, virtual reality. That's in the middle there. That's me before and after my gender filter change. You can decide which is which, before or after. But this is now becoming mainstream. We're seeing IKEA, Verizon, you guys wrote about that in your article, Marriott, companies using AR and VR to really boost the consumer experience. Gaming is going into the cloud. This is in the hype stage of reality. Then we're going to go disappointment, and then eventually real businesses will come out of this. I think this is one of the most interesting near-term trends. That's 10 trends. I'm almost done, but I got a bonus one for you. Here we go. Crypto is going mainstream. The only way cryptocurrency, quasi-cryptocurrency, could ever go mainstream is if you had some massive platform endorse it. What massive platform could that be? Here's WhatsApp with over 1 billion users worldwide on a daily basis. Facebook Messenger with over 1 billion users. They're going to put this cryptocurrency on the wall, in their wallet, in the app. And so these Libra coins are going to go mainstream. That's the last trend. I got, here's a quick summary. There's too many trends here to just summarize, but if I were to pick out one negative, one positive, the negative here is regulatory risk is clearly ramping. The real positive here is I think everything's going over the top. Music is, Spotify's a great example of that. Netflix is, and gaming is going over the top. That's it. Thank you.